Welcome to the XFO Intelligence Podcast, where we apply our deep augmented thinking to the signals shaping global wealth. I'm Kai.
And I'm Liam. Today, we're unpacking a really powerful convergence. It's detailed in our latest strategic report. It's a trend that connects, the world's largest economic initiative with the evolving mandate of intergenerational wealth.
So we're talking about China's Belt and Road Initiative, the BRI, but not the BRI of, say, 10 years ago. It's maturing, and it's moving beyond just building infrastructure.
Right.
And at the same time, global family offices are fundamentally reorienting their entire strategy.
Exactly. I mean, it's no longer just about quarterly returns. The new mandate is all about legacy, ESG alignment, and long-term resilience. And our analysis reveals that one location has really positioned itself as the indispensable bridge between these two worlds, Hong Kong.
So the report calls Hong Kong a systemic integrator. It's a pretty interesting phrase. Liam, let's break that down. What does that actually mean in practice?
Well, think of it like a universal adapter or maybe an operating system. So a family office in Zurich wants to invest in a really complex opportunity in a developing BRI market, let's say in Central Asia.
Okay.
But there are huge barriers, right? Different legal systems, currency risks, a total lack of reliable information. Hong Kong acts as the trusted platform that just smooths out all of that friction.
And the report structures this whole value proposition around four foundational pillars. The first one, and probably the most straightforward, is structural and capital efficiency.
Yeah, this is the hard math that, it appeals to any CIO. You have Hong Kong's territorial tax system, so no capital gains, no tax on offshore income.
Wow.
And now you even have these specialized structures like the Family-Owned Investment Holding Vehicle, the FIHV, which offers specific tax exemptions. It's just a highly optimized environment from a cost perspective.
But of course, low taxes aren't nearly enough when you're dealing with complex cross-border risk.
Yeah,
and
absolutely.
That's bring us to the second, and I'd say arguably the most critical pillar, which is risk mitigation and legal architecture.
This is really the core of the strategy. That family office in Zurich can structure their deal so the actual contracts are governed by Hong Kong's common law and subject to its world-leading arbitration centers.
Right.
So it basically wraps a high-potential, high-risk investment in a blanket of trusted, enforceable legal security. It de-risks the venture at its contractual heart.
So it's like an export of legal security. The third pillar is the intelligence network. This is all about moving beyond just public information.
Right.
The sheer density of elite financial institutions, law firms, specialized consultants in Hong Kong, it creates this unparalleled intelligence gathering ecosystem.
Okay.
It reduces that information asymmetry, and it gives you access to proprietary deal flow, to due diligence capabilities that you just cannot replicate from a distance.
And the fourth pillar, strategic positioning, that just solidifies everything. Hong Kong isn't just an island.
No.
It's a key node in the Greater Bay Area. It's a sandbox for new technologies and business models that can then be scaled across that entire BRI landscape.
Okay, so Hong Kong is the platform. Now for the really exciting part. What are the actual opportunities?
Yeah.
Because the report makes this crucial distinction. The best plays are not in, pouring the concrete.
Correct.
The real value is in what we're calling the multi-layered opportunity spectrum. And we've broken it into three tiers. So tier one is the core ecosystem. These are the businesses that make the new infrastructure function at a much higher level.
So we're not talking about the railway itself,
Right.
but the logistics software company that optimizes all the freight moving on that railway, or maybe the fintech platform that finances all the new trade flowing through it.
Precisely. And then you have tier two, the adjacent market opportunities.
Okay.
This is the direct economic ripple effect. So a new port is built, and then suddenly a whole region becomes accessible.
And that's where consumer brands can finally enter.
Yeah.
Where industrial parks are developed to leverage the new logistics, and where regional banks and insurance companies see this huge surge of activity. It's the growth stimulated by the infrastructure.
And finally, Tier 3, derivative and sustainable transition opportunities.
Right.
This is where the strategy really truly aligns with that modern family office mandate we talked about.
This is the future. I mean, we're talking about renewable energy projects to power these new economic corridors,
Wow.
digital banking platforms for newly connected populations, clean water, waste management solutions, even developing carbon credit projects. Passionate. This is where superior returns and a sustainable legacy really converge.
And the report, it doesn't just identify the what, it gives you the how through what we call the adaptive investment framework. It's not a passive strategy at all. It starts with a balanced capital allocation, 70% of capital in core, proven opportunities that are vetted through that Hong Kong network.
With 20% reserved for an exploratory allocation to discover emerging sectors, and then finally 10% for a catalytic allocation.
Okay.
So opportunistic, high-impact ventures that deeply align with the family's own values.
And this whole portfolio is managed dynamically through a continuous optimization formula.
Right.
Every single investment gets scored quarterly on financial return, strategic value, and ESG alignment, all balanced against its risk profile. This forces discipline. So high scorers get more capital, low scorers are systematically reviewed for reallocation.
It's a self-correcting, self-optimizing system, and the framework insists on routing all investments through those Hong Kong-based legal structures to embed that risk mitigation we talked about from the very beginning.
So for a family office principal or a CIO who's listening right now, the report outlines really clear immediate actions for the next 12 months.
Okay.
Establish a presence in Hong Kong, build that specialized internal or external expertise, and start cultivating that ecosystem of partners.
It's a roadmap. It transforms this vast, complex global initiative into a tangible, actionable, and values-aligned investment portfolio.
Yeah.
And Hong Kong isn't just an optional gateway. Our analysis shows it's the essential strategic platform for capturing this value.
And the window for establishing the strategic position is open right now.
Right.
It requires decisive action. The intersection of the BRI's evolution and this new family office mandate, it represents a defining opportunity for wealth creation and legacy building in our time.
Now, here's a question we'd like you all to think about. As capital becomes more and more focused on both profit and purpose, how will platforms that can successfully de-risk and translate values across borders like Hong Kong reshape the future of global investment?